When you think of America's insurance crisis, you think of Florida. The headlines, the carrier exits, the governor's press conferences. But what if I told you there's a state where homeowners pay nearly 4 times the national average for coverage, on the third lowest incomes in America? A state where insurers are losing $159 for every $100 they collect. A state where 1 in 5 homeowners have simply given up and gone completely uninsured. That state is Louisiana, and nobody is talking about it. In 2025, Louisiana homeowners will pay an average of $13,937 for insurance, a 27% increase that leads the entire nation. 12 insurers have collapsed since 2020. Foreclosures are up 24%, and 84,000 residents have fled since Hurricane Ida. This is the insurance apocalypse happening in plain sight, while the media obsesses over Florida. Here's what's really happening in the Pelican State, and why it might be worse than anything we've seen in the Sunshine State. Hit subscribe to FinEco Insider for housing market analysis without the hype. Let's dive in. Let me show you why Louisiana's insurance crisis is fundamentally different from Florida's, and in many ways far more devastating. Florida gets all the attention because of raw premium numbers. The average Florida homeowner pays $15,460 annually. Louisiana sits at $13,937. So Florida's worse, right? Not even close. Here's what that comparison misses entirely. Louisiana's median household income is $60,986, ranking third lowest in America. Florida's median income is nearly $17,000 higher. When you adjust for what people actually earn, Louisiana homeowners spend 8.4% of their household income just on home insurance. That's the worst affordability ratio in the country. Let me put that in perspective. The national average is 1.93%. Louisiana residents are paying more than 4 times that rate. For a family earning the state median, that $13,937 premium isn't just expensive, it's devastating. And it's getting worse at a pace that defies belief. In 2024, Louisiana premiums jumped 38%, the highest increase in America. Florida, thanks to reforms passed 2 years earlier, saw just 9%, the lowest increase in America. For 2025, Louisiana leads the nation again with a projected 27% spike. Since Hurricane Ida hit in August 2021, cumulative premium increases have exceeded 164% in many markets. That's not a typo. Some Louisiana homeowners have seen their premiums nearly triple in 4 years. The regional variations paint an even darker picture. In Terrebonne Parish along the coast, the average premium hits $8,316. In Metairie, it's $7,478. And that's before flood insurance, which averages another $3,558 in high-risk coastal zones. Do the math. A coastal Louisiana homeowner can easily pay $11,000 to $12,000 annually just for insurance, on a median income of $61,000. That's 18 to 20 cents of every dollar earned going to insurance companies before a single mortgage payment, utility bill, or grocery run. Monthly housing costs for a median-priced New Orleans home have jumped from $1,400 in 2020 to $2,154 today. That now requires a household income of $86,000 to afford, versus $57,000 just 5 years ago. In a state where median income is $61,000, the math simply doesn't work anymore. But here's what makes Louisiana's situation truly unprecedented. The people who can least afford coverage are the ones being hit hardest. Louisiana now has the 3rd highest uninsured homeowner rate in America. 21.2% of all homeowners carry no coverage at all. That's roughly 400,000 homes completely exposed to hurricanes, floods, and fires. In one of the most hurricane-prone states in the country. Think about what that means. More than 1 in 5 Louisiana homeowners have made a calculated decision that they simply cannot afford protection. They're gambling their entire life savings, their family homes, everything they own, because the alternative is financial ruin from premiums alone. The reasons are purely economic. Louisiana ranks as the least affordable state in America for combined home and auto insurance. The R Street Institute found Louisianans spend 3.84% of income on home insurance alone, double the national average. And here's a critical detail most people miss. Nearly half of Louisiana homeowners, 48.2%, own their homes outright with no mortgage. That means no lender requiring insurance. When premiums spike 30% or 40% in a single year, these homeowners face a brutal choice: pay the ransom or drop coverage entirely. Tens of thousands are choosing to drop coverage. The parish-by-parish data tells the story. Terrebonne Parish leads at 29.7% uninsured. St. Landry follows at 28.6%, Livingston at 27.3%, Iberia at 26.9%. These are the poorest parishes in Louisiana, and they have the highest uninsured rates. The correlation is direct and undeniable. What happens when a Category 4 hurricane hits a region where 30% of homes have no insurance? We're about to find out. And the answer isn't going to be pretty. If you're finding this valuable, hit that subscribe button. We tell you the truth here, not the sales pitch. Now let me show you why this crisis exists in the first place. 12 insurance companies have declared insolvency in Louisiana since 2020. Another 12 or more have simply withdrawn from the market entirely. The collapse affected approximately 205,000 policyholders, roughly 17% of the entire market, in less than 4 years. This is an unprecedented failure of the insurance system. Let me walk you through what happened. In 2020, Louisiana got hit by 5 named storms, more than any state in a single year. Hurricane Laura made landfall in August as a Category 4 with 150 miles per hour winds, the strongest to ever hit Louisiana by wind speed. Total damage reached $23 to $28 billion. 6 weeks later, Hurricane Delta struck within 12 miles of Laura's landfall, adding another $3.5 billion in damage to communities still picking up debris. 3 weeks after that, Hurricane Zeta tracked across New Orleans as a Category 3, causing another $4.4 billion. Then came 2021. Hurricane Ida hit on Katrina's 16th anniversary as a Category 4, causing $75 to $85 billion in total damage, making it the 6th costliest tropical cyclone in global history. The insurance industry mathematics became impossible. Louisiana insurers paid out $23 billion in losses from 2021 to 2022, while collecting only $5.2 billion in premiums. That's a combined ratio of 159 paid for every $100 collected. The Insurance Information Institute calculated that Louisiana homeowners insurers would need a combined ratio of 85 for 24 consecutive years just to recover 2021 losses. The insolvencies came in waves. Access Home Insurance and State National Fire collapsed in November 2021, leaving 29,000 policyholders scrambling. Lighthouse Property Insurance Corp followed in February 2022 with 30,000 policies. Southern Fidelity America's Insurance Company, Weston Property and Casualty, FedNat, United Property and Casualty. One after another, carriers that had written policies for decades simply ceased to exist. The Louisiana Insurance Guarantee Association has paid out over $800 million in claims and borrowed $620 million via bonds to meet obligations. Total expected payouts will reach $950 million to $1.2 billion. For context, Liga hadn't assessed insurers since 2004 before this crisis. They've now implemented 2% annual assessments just to stay solvent. Here's the critical point. Florida's market is 5 times larger than Louisiana's. When a carrier fails in Florida, the remaining insurers can absorb displaced policyholders across a bigger base. When carriers fail in Louisiana, there's nowhere to go. The market is too small. The concentration risk is too high. And the remaining carriers are raising rates to compensate. It's a death spiral, and it's accelerating. Want to see what happens when insurance collapse meets hurricane devastation? Look at Lake Charles. More than 4 years after Hurricane Laura, this city of 80,000 remains visibly scarred. Hundreds of blue-tarped roofs dot the landscape. The Capital One Tower, once the city's tallest building, was eventually demolished. All 463 public housing units remain uninhabitable. 50,000 housing units were damaged, and thousands have never been repaired. Why? Because the insurance system failed these homeowners completely. Many residents filed claims with carriers that subsequently went bankrupt. Others received partial payments that didn't cover repair costs. Some are still fighting insurance companies in court more than 4 years later, their homes deteriorating while attorneys battle over coverage language. Lake Charles Mayor Nick Hunter has called insurance his biggest concern for the community and the Gulf Coast. The city faces a projected 2.9% home value decline, specifically due to insurance costs, in a market where values should be recovering after disaster. The human cost is staggering. Louisiana has lost 84,000 residents since 2020. Net domestic outmigration hit 17,000 in 2024 alone. The state ranks 44th in net domestic migration, meaning only 6 states saw larger percentages of residents flee. 2/3 of Louisiana's 64 parishes lost population last year. New Orleans is down 20,700 residents since 2020, now at 362,700, the lowest since 2012, and just 73% of its pre-Katrina population. Caddo Parish around Shreveport has lost 11,000 over 3 years. Plaquemines Parish lost 2.39% of its population, representing $16 million in adjusted gross income that left with departing families. Louisiana's 2021 to 2022 migration loss translated to an $880 million loss in adjusted gross income. That's tax revenue that walked out the door, never to return. Economists attribute the exodus to compounding factors: rising insurance costs, increasing overall cost of living, hurricane displacement, weak economic diversification as oil and gas contracts, and the state's stubborn 18.7% poverty rate that makes any additional financial burden unbearable. The data center's Allison Plyer describes Louisiana's economy as one of the weakest in the country for decades. The insurance crisis is accelerating a decline that was already underway. Please take 2 seconds to help us out and hit the like and subscribe if you're finding this eye-opening. Each like helps more people see what's really happening in Louisiana. Now let me show you how this compares to what Florida went through. I know what you're thinking. Florida's insurance crisis dominated headlines for 3 years. How can Louisiana possibly be worse? Here's the comparison that tells the real story. Florida enacted comprehensive tort reform in 2022. Louisiana didn't pass meaningful reforms until 2024, 2 full years behind. Florida's Citizens, the state insurer of last resort, has depopulated from 1.4 million policies at peak to roughly 385,000 today, a 72% reduction. Florida's 2024 rate increases averaged just 9%, the lowest in America. Citizens is now filing rate decreases. Louisiana, still in the early innings of recovery. Governor Jeff Landry signed 27 insurance reform bills in 2024 and 2025. The changes are significant: elimination of the 3-year rule that locked insurers into policies, reduced approval timelines, comprehensive tort reform. 10 new insurers have entered since reforms passed. Rate increase filings dropped from 80 in 2023 to 50 in 2024. But Insurance Commissioner Tim Temple estimates Louisiana needs 18 to 24 more months before meaningful consumer relief materializes. That's 18 to 24 months of 27% annual increases, of foreclosures up 24%, of homeowners dropping coverage entirely. Here's where Louisiana is definitively worse than Florida. Income-adjusted affordability. Louisiana has the worst ratio in America. Rate of premium increases, 27% to 38% annually versus Florida's 9%. Uninsured homeowner rate, 21.2% versus Florida's 19.4%. Market size disadvantage, 5 times smaller makes it harder to attract and retain insurers. And loss ratios that remain completely unsustainable at $159 out for every $100 in. Florida had the luxury of a massive, diversified economy and population to spread risk. Louisiana doesn't. Florida commanded national media attention that forced political action. Louisiana doesn't. Florida had a 2-year head start on reforms. Louisiana is playing catch-up with families already underwater. The foreclosure data proves the crisis is accelerating, not stabilizing. Foreclosure filings have spiked 24% statewide in the first half of 2025. Jefferson Parish is up 50%, Orleans Parish up 36%, East Baton Rouge up 24%, St. Tammany up 22%. Real estate professionals directly link rising foreclosures to insurance. When premiums spike 27% to 38% annually, escrow payments increase proportionally, pushing monthly payments beyond household budgets. Louisiana's long foreclosure timeline, averaging 3,600 days, nearly 10 years, means distress builds slowly but inexorably. Properties damaged by hurricanes and caught in insurer insolvencies face particular peril. Many homeowners still await claim resolutions years after Ida, unable to afford repairs and increasingly unable to maintain coverage. Some properties have been condemned and demolished. Others sit abandoned, uninsurable and unsellable. The reforms are real. The early signs are positive, but the honest assessment is brutal. Commissioner Temple reports encouraging progress. 10 new insurers have entered Louisiana since reforms passed. Rate increase filings dropped significantly. Average approved increases fell from 14% to 6.6%. Most significantly, 7 rate decreases were filed in the first 3 months of 2025, more than in all of 2023 or 2024 combined. Citizens Louisiana, the state insurer of last resort, has stabilized financially. Its surplus nearly doubled from $194.6 million in 2023 to $386.3 million in 2024. The 1.36% emergency assessment on all property policies ended early in April 2025. But even in the best-case scenario, Louisiana residents face 18 to 24 more months of pain before stabilization. And even then, premiums will remain multiples of national averages. This isn't a problem that gets fixed, it's a problem that gets managed. And here's what nobody wants to talk about. Louisiana's physical risks are getting worse, not better. The state has the highest relative sea level rise rate in America, driven by rising oceans and land subsidence averaging 5 millimeters annually. Parts of New Orleans already sit 1.5 to 3 meters below mean sea level. Louisiana loses approximately 1 football field of land every hour. Projections show 800 to 4,000 square miles of additional land loss by 2050. 6 of the last 8 years have seen Category 4 or 5 hurricane landfalls on the U.S. mainland. Climate models project hurricanes becoming more intense, with greater rapid intensification potential. Louisiana sits squarely in Hurricane Alley, where the warm Gulf of Mexico serves as a hotbed for storm formation. Insurers price future risk. Louisiana's future risk profile is deteriorating. No amount of tort reform changes the fundamental physics of rising seas and intensifying storms. For buyers considering Louisiana, the math is clear. You're not just buying a home, you're buying exposure to the most expensive, least affordable, most volatile insurance market in America, in a state where physical risks are accelerating. For current owners, the options are limited. Fortify your home to reduce premiums where possible. Shop aggressively among the new entrants. Consider Citizens as a bridge while the private market stabilizes. And understand that the 18 to 24-month stabilization timeline is optimistic. For everyone else, watch Louisiana closely. What happens here is a preview of what's coming to every coastal state in America. The combination of intensifying storms, rising seas, carrier mathematics, and affordability constraints isn't unique to Louisiana. It's just hitting Louisiana first and hardest. Louisiana's insurance crisis isn't getting the attention it deserves. While media outlets cover every Florida press conference, 84,000 Louisiana residents have quietly fled. While politicians debate Florida reforms, Louisiana homeowners are paying 8.4% of their income just for coverage. While Florida's market stabilizes, Louisiana's is still in freefall. This is the insurance apocalypse beyond Florida, and it's happening right now. The data is clear. The premium increases are the highest in America. The affordability is the worst in America. The uninsured rate is among the highest in America. And the physical risks driving this crisis are only getting worse. If you found this valuable, do yourself a favor. Hit subscribe to FinEco Insider. We dig past the hype to deliver real stories, real data, and real value, so you can protect your wallet and plan your future with confidence. Drop a comment below and tell me, are you seeing insurance issues in your market? What are premiums doing where you live? Your insights help shape the content on this channel, and we read every comment. We'll see you in the next video.